Hello everyone. You might have heard people saying that through your stockbroker, you can also invest in ETFs like gold ETFs or Nifty 50 ETFs. So, what are these ETFs or exchange traded funds? Today we are going to discuss about that. ETFs are like diversified mutual funds that are listed and traded on the stock exchange. So, in ETF, you get the diversification which is there in the mutual fund. Also, you get the real-time tradability which is available in stocks. Because ETFs replicate the index that it follows, like Nifty or Sensex or gold, it is well diversified. And you can buy and sell in real time, just like stocks. So you can even do the intraday trading in ETFs. So it offers that flexibility. Funds collected by ETF are invested in securities like gold, debt, equity, which forms part of an index or asset class. ETFs try to follow or replicate the performance of benchmark index. That benchmark index may be Nifty 50 or Sensex or Bank Nifty or PSU Bank or mid cap index or gold or silver. So whatever is the benchmark index, the ETF will follow that. If the benchmark is gold, if the price of gold increases by 1%, the price of that ETF will also increase by 1%. If a particular ETF follows Nifty, if Nifty increases by 0.5%, the Nifty ETF will also increase by 0.5%. It will invest in the securities which are part of Nifty 50 in the same proportion as that of the index. So in Nifty 50, the weightage for Reliance is 11%, the weightage for HDFC Bank is 10%. So in the same proportion, the Nifty ETF also invests. The same proportion of investment is followed. Investment style of ETF units is passive investing. So what is passive investing? Fund manager invests in securities which are part of the index. Main aim of the fund is to replicate or follow the returns of the index by making investment in the same proportion. No active fund management is required. So in the case of active investment, the fund manager often makes changes in the proportion of investments. He will buy some more securities and he will sell some of the securities. So he will be making changes every now and then. But in case of passive investing, the fund manager will not do all these things. So he will just invest in the same proportion as that of the benchmark index, and after that he will not do anything. Types of ETFs. So what are the main types of ETFs which are available for an investor for investing or trading? The first category is equity or index ETFs. The second category is debt ETFs. There are also gold or silver ETFs, or we can say commodity ETFs, and there is also gold equity ETFs. Means we are investing in international indexes. Equity ETFs. Equity ETFs are exchange traded funds that seek to replicate and track a benchmark index like Sensex or Nifty as closely as possible. So equity ETF just follows that index. So that index could be Nifty or Sensex or Bank Nifty or PSU Bank or CPSE index. CPSE means Central Public Sector Enterprises. So all the listed public sector enterprises will come under that, or it may be mid cap index, or it may be small cap index, or it may be auto index, like this. And in equity ETFs there will be diversification, because it will not invest in a particular stock, it will invest in the index. So index itself will be diversified. So the investor gets the benefit of diversification. Through diversification he can reduce the risk. Also the ETFs will get the tax benefit. The price fluctuations in equity ETFs are directly linked to the index it follows. So the price fluctuations in these equity ETFs will be same as that of the index it follows. Gold ETFs. So gold ETFs tracks physical gold. So if in the international market the gold prices increases by 2%, the price of this gold ETF will also increase by 2%. So, and it will also decrease in the same way. And in gold ETFs you are not buying the physical gold, you are buying the gold in the electronic form. You are buying the gold in your demat account. So as you know, the ETFs you can buy through your stockbroker. So you are buying in electronic form. just like you buy the shares. Debt ETFs and global equity ETFs. So debt ETFs follows the debt index, any specific debt index. So it could be government securities index or any other debt. So in debt index, the volatility will be very less, but investors can choose these debt ETFs for long term investing, let us say for 2 years or for 5 years, etc. Global equity ETFs, the investors can invest in international indexes like the Nasdaq index of America or Dow Jones index of America. So they can buy these global ETFs. Now we can see some of the examples of ETFs. So in equity, we can give the example of SBI ETF Nifty 50, SBI ETF Sensex. So the benchmark is Nifty 50 and S&P BSE Sensex. Under debt ETFs, we have Bharat Bond ETF April 2030, Bharat Bond ETF April 2031. In gold, we have Nippon India ETF Gold Bees, HDFC Gold ETF. And international ETFs, we have Motilal Oswal Nasdaq 100 ETF. So Nasdaq is the American index. How to invest in ETFs? So to invest in ETFs, an investor needs to have 3 accounts. That is, bank account means savings bank account in a nationalized bank, trading account with brokers. So trading account with the broker like Angel Broking or Zerodha or SBI Securities, etc. Any one account will be enough in any one of the broker. And demat account with the depository participant. Depository participants are CDSL and NSDL. So if you have the stockbrokers account, so they will be having the account with the depository participant. So a demat account with the any of the stockbroker will serve the purpose to invest in ETFs. So during NFO, during new fund offer, you can invest. So the minimum amount will be 500, or they may specify some other minimum amount like 1000 or 2000. That amount you have to invest. So this is just like IPO in case of stocks. So when the ETF comes for the first time in the market, you can invest, or you can invest post closure of fund offer on ongoing basis. That is, you have to invest in through the stock exchange. You have to buy through your stockbroker. So you can invest very little amount in this, like rupees 30. For example, if it is a PSU bank ETF, it will be available for rupees 30 or 35. So with that minimal amount also you can invest, because you can buy one unit also. You don't have to buy 100 units or something like that. You can buy minimum amount also. How to invest in ETFs at stock exchange? So NFO has already closed, so you did not buy in the NFO. Still you can buy through the stock exchange, but that is through your stock broker. So it is similar to that of you buy or sell shares through your stockbroker. Investor need to place buy or sell order with the stockbroker, just like we buy other stocks like Reliance or TCS. Investor can buy or sell at stock exchange post listing of ETF units. So first that ETF will be listed on the stock exchange, then you can buy through your stockbroker. So you can buy the minimum of 1 unit. You don't have to buy a large number of units. And settlement will take place just like stocks in the T+2 days. Means if you buy on Tuesday, the ETF will come to your account on Thursday. That is trading day plus 2 days. T+2 days, that settlement will be made to your demat account. Advantages of ETFs. ETFs can be bought or sold just like a stock on the exchange. For example, in case of mutual funds, the NAV is calculated only on the day's closing basis. But ETFs trade real time. So you can track the movement of the ETFs on a real time basis. So that is one of the advantage of ETF. So whenever you feel that you are at a profit because you bought at a low price and now you can sell at a high price because now it is trading at a high price, you can sell that ETF and book your profits, which is not available in mutual funds. Mutual fund, in case of mutual funds, there will be close-ended mutual funds. So close-ended mutual funds, you can redeem only at the date of maturity. Limit order, ability to put limit orders. So you can put the selling order. For example, you have bought the PSU bank ETF for rupees 34. Now you can place the limit order, selling limit order at rupees 36. If the price of the ETF reaches rupees 36, it will be automatically sold and you will be earning some profits. Minimum trading just 1 unit. Already explained. You can buy even only one lot also. Buy and sell at real time prices. It's already explained. Delivery in your demat account. Yeah, delivery will happen in T+2 trading days. Lower cost. Yeah, this is one of the main advantages of ETFs. So some stockbrokers offer ETF products even lesser cost than the stocks. Some stockbrokers don't charge any brokerages for ETFs. Only the government charges will be imposed. This is to encourage investment in ETFs. So, in conclusion, we can say that ETF offers the flexibility of stocks and also the diversification of mutual funds. Thank you.